In today's episode, I'm going to run through a very interesting idea that I came across from another Bitcoin evangelist, and it's to do with the idea of adopting Bitcoin as a collateral in a securitized-backed loan. So let's run through the details next. Right, so just a reminder, the financial carnage during the global financial crisis of 2008 was created by standardizing residential backed mortgages in the US, was the biggest in the financial collapse that we've seen, as it was down to the awful securitized lending in the US. It was pretty much a structured product type thing. So Bitcoin, in this sense, would be ideal that if you set Bitcoin up into a structured product, it would lead to potentially huge swathes of institutional money pouring into this type of product, where you have, run through an idea, a principal protected note in a structured product, where you'd have, let's say, a capital guaranteed note of, let's say, 10 billion US dollars to go out and buy typically a 5-year government treasury bond, which yields roughly between 4 to 5%, to capital guarantee that. And then the 80% of your $10 billion that your capital protected, part of your institutional product, the remaining 20%, which you haven't invested, would then go into buying, let's say, $2 billion worth of Bitcoin. Now, during the global financial crisis, banks and other lenders sold, potentially trillions worth of these type of lending products. Still in a multi-trillion market, but what happened if this kind of now flows into Bitcoin? You can see the humongous potential this would bring. This model proposes using indeed Bitcoin as collateral, coupled together with, let's say, the US Treasury bonds, to offer a new and potentially more secure financial product. Now, ever since the ETF was launched in the US, we're all very excited about witnessing huge capital inflows of $500 million a day pouring into these ETFs. Were absolutely amazing, without a shred of a doubt. But for this kind of product structuring, could run out through the door if we base it using Bitcoin, at least proportional amount of that on Bitcoin. Now, the assumption here is we can see indeed some very, very interesting returns per annum that could be potentially risk-free. And this approach would certainly put Bitcoin on steroids. And it's just one type of product stream, not multiple. So clearly there is an opportunity to be had in this space. Right, so just to conclude, it was a very short episode, but I found it very interesting, this idea, because it is novel. This proposed model certainly offers that balanced approach, combining the security of, let's say, US Treasury bond, but adding the growth potential of Bitcoin into the securitized loan. It's certainly a novel alternative for securing loans while potentially increasing asset value. Now, given that we have already achieved a series of milestones in terms of Bitcoin adoption around the world, just to recall on what those were, we had already the launch of the Bitcoin spot ETFs in the United States since January of this year, and there's also rollouts that have already occurred around the world, and other countries are increasingly adopting Bitcoin spot ETFs in their territories. There's been a change in fair value accounting rule. Just very quickly, this allowed corporate treasuries to add Bitcoin as an appreciating asset rather than as a liability from an accounting perspective, which makes it more lucrative asset to be had on the corporate balance sheets. Also, we already had the presidential campaigns, a couple of key pledges and announcements made at the last Bitcoin Nashville conference by President Trump and before him RFK Jr., including Cynthia Lummis, together with Trump, where the main highlight was a declaration of adopting Bitcoin as a strategic reserve for the US Treasury, to use it as a fight against inflation and certainly to pay the national sovereign debt rather than taxation on its citizens. But there are still two other outstanding milestones that I feel that are important for Bitcoin to be fully adopted into the mainstream. The next one is to have bank adoption and self-custodying Bitcoins on its platforms, as well as self-custodying the private keys. And then this last idea, this rather novel idea of having or combining Bitcoin and US Treasury bonds in the securitized loans for institutions to sell these kind of structured products as loans to their customers. These are typically handled by banks and other institutional lenders out there. So if we have all of this, mark my words, at that point Bitcoin will be completely parabolic. It makes sense. I wouldn't see this last structured product idea coming into the fold immediately. I think honestly it will happen within the next 5 years, purely because we're still very early along the curve in terms of Bitcoin adoption. We already have made some remarkable achievements in adoption, But these last two, the bank adoption and self-custodying, and the structured product lending, combining US Treasury bonds and Bitcoin, are the two remaining milestones. And once we see those through into fruition, which will happen in the next 5 years, that's the point where I'd see Bitcoin as the end game. It's truly into the mainstream, and at that point we're talking about potentially millions of dollars worth per Bitcoin at that point. So this is why I greatly encourage people to consider all of these, do their own research as I have, and you'll be left without any doubt at all that you should start, investing small and wisely, whether it's through dollar cost averaging, pound cost averaging, euro cost averaging, or even yen cost averaging, small, little by little, just to add small amounts in your portfolio, because when all of these milestones are fully achieved, that's when it's going to be truly parabolic in terms of price, because at that point it'll be completely embedded into the financial system around the world, into the mainstream. So hopefully you found this video insightful. If you have, please don't forget to hit the like button on this video. If you haven't done so already, please subscribe to this channel, as I regularly post high quality videos that could be of interest to you investors out there. So until next time.